Well, good evening, everyone. Hey, it is Shooter Scott Henderson. Of course, here at Fundamental Trends, we're going to go over primary waves. This week, we are going to go over growth stocks. Of course, at the end of our presentation, please do review our disclosure. Now, outside of the FOMC meeting this week, which I hope it doesn't stall us, volume suck that comes out of it kind of thing, where everybody's sort of in a mixed bag. They don't know what to do. I hate to say I'm there. So I'm sure there's other traders that are there too. I think we're indecisive going into the next couple of weeks anyways, really to see whether or not we come in next week and they rejoin the rally. At this point, they bought the dip after FOMC. We couldn't even take out the gap. So that's positive. Now, on sort of a sour note, something that came out this week, now I hope they still sign, but Saudi Arabia has decided not to extend the petrodollar contract with the United States. To be candid, I'm not sure exactly how to grasp the outcome if that stays for too long. I think their problem is that they've chosen to accept 5 separate currencies, and I think they'll run into the same problem that they had prior to 1974 in the petrodollar contract, where they ended up with regimes buying their oil, and the currencies were so fluctuated so much that they had a hard time maintaining profits from those countries. So ultimately, that's why the petrodollar was created. It created a lot of stability for Saudi Arabia, and it created a lot of stability here for the United States. So let's hope they come to some kind of agreement, but that's some news we just need to keep in the back of our mind. But taking a look at the growth stock, starting off with Square, we've been in this flat since really July of 2022. So we've been in there quite a little bit. We've tested it a number of times, right up here around 78, I believe it was. And forgive me, I don't have my breakout line up there. It's supposed to be there, so we'll switch that out. But, looking at this, we have a primary wave 2 that should manifest. So that'll be a new primary wave setup once we have that around 57.44. The last one that we had came in around 45 or 46, I believe was where that number was down here on this cycle wave 2. Now, the one thing in flats is accounts tend to flip around a little bit, so it's really hard to project where we're going to go. But if this 2 does manifest, our primary wave 3 then measures to about 136. So, my only strategy with Square is really cash secured puts. When we get below that 58, that should be your maximum premium, which really isn't too far away. It's still, about $4 away from where we are. So I would target the 50 to 55s. I think 55s have a very good chance of being assigned, so just keep that in mind if you go with those numbers. All right, now taking a look at Generac. Again, we're in another flat. Now here I do have the breakout line. By the way, I'll repost the chart with a breakout line in there just so you guys can see it. So maybe we get this back test to around 127. Then we get a push to about 203, and then we get another back test to about 127. So I think all we do is leg up here on the flat. So this flat's here, and then we'll get another set of flat that's here. I don't know that we actually have a full breakout until after the first of the year. That's what it's looking to me like here. And I'm seeing this in a lot of industrial stocks, by the way, where they're sort of in this flat mode. And I think that has a lot to do with interest rates and the indecisiveness of the Fed to cut rates to help them out. So now, as far as Generac, the only strategy that, here again, retraces to about 125. At that point, I would sell around 110 cash secured puts if we get to that level, is my thought. Okay, if not, chase the breakout and then just hold it to the 203 and sell it, and it's just a trade. That's sort of my thought. All right, now ENPH. We took a swing on this, barely worked. It just is way too emotional in this flat. We keep rejecting this price. We're going to break out. And the challenging part is that we keep closing on the bottom. We get up here, we tag the breakout, which is really this band over here, that off number here. We get a decent close, and then we reject it the next day. Now, we had a decent push, but we closed on the bottom of the candle. So all of these 3 indicate that we might flush lower, which was one of the reasons I exited basically at a slight loss, simply because that's where we were. So, at this point, if we get down to this 23.6 fib, maybe 110 area, then, maybe sell some cash secured puts. If we stay elevated and we hold this, maybe grab a piece on our next back test, because this, typically when you get these diamonds patterns, they're 5 or 6 candles on the weekly. So you're not going to get like 20 candles up here. So you're going to get probably 2 or maybe 3 more candles. Then it's going to decide if it's going to back test the 23.6 fib or if we're going to actually get the breakout there. So I would probably sell 115 cash secured puts if it doesn't look like we're going to break down. All right, now American Semiconductor, we've had one heck of a run. What I don't like about this chart is this candle over here that we got in 23. We got this push and we completely rejected price, almost a round trip. Those are dangerous on a chart. Push, round trip. So this is indicative of push, another round trip. So pretty much every breakout that we've had to the upside, we've rejected higher prices and turned around for some reason. I don't know specifically why. We've not confirmed on this high or this high. So we had this confirmed pattern here. That was our confirmed high, divergent high, divergent high. So that was a 3 drive. So it manifested real nicely, put in an ABC pattern, gave us 100%. That's one reason I like those patterns, because they're one of the few setups that actually give you the opportunity to get 100% on the retrace. So I'm seeing 28.17 as our primary wave 3. However, that could extend if we have any kind of more euphoria towards AI in American Semiconductor, because we really haven't got that kind of news from them. So, we could just blow out. Really, and push up towards, $40 and then find our top. But I don't like, the only thing that's positive here is this was not a great candle. That was an extension candle, and this is another breakout candle. So whether or not we've put in that 22, the breadth of this particular candle in the week, basically we put in just shy of 28 and we extended past the 22. So if this slope continues to the upside, we shouldn't break below these two candles. So you can really just draw a line here. I don't actually have one there, but from this low point to this low point, just draw a line and extend it out. As long as we don't cross below that line, I don't think a full retrace is on the table yet. But we should build out a flat up here is what we should do, or a flag is typically what happens. So the challenging part here is if you have a full position on and you weren't a cash secured put seller, you got about a 50% chance that this retraces. So it's not a bad idea to trim here or exit your common positions and then go with some August calls like 32 or 34 bucks in that strike range. And honestly, I don't recall whether those strikes were there. But from that way, your risk is off the table on this push and we get to 50% back, then enter it again. Because this right here, this flag or flat that we build out here could be, very much just like this, and it could break down just like this over here, which makes it very challenging up here because, we closed on this candle, right? We've closed on this candle, even though this is more bearish than the close on this candle, closed on the high side of the candle. So we're bullish, as far as I'm concerned, high side, but we've had 3 generals. So typically you do get a 50% retrace, and that would be from here to here. So 50% would take us back to about $18.50 or $19, which obviously you don't want to ride out that heat if you have these gains. You're better off booking the gains, in my opinion. Obviously, if somebody else has another opinion, obviously feel free to share that, but that's my thought. All right, so now looking at AST Space Global, and we had a number of questions on that this week. It has some significant upside here. The challenging part is this is my bullish count. The actual bearish count that the application or motive wave is giving me is that this is our C. So we're starting a leg lower and we should back test this trend support. So as long as we don't close below this 382 fib, I don't think that's the case. I think this is the flag, leg 1. This would be drive 1, this will be 2, we'll get a 3, 4, etc. So 1, 2, 3, 4. So we should head towards about $16. So my risk here would be that 382, which is roughly $8. So max I would risk to the downside would be $2.27 on AST Space Global, and I would take my profits and then look at a place to re-enter. Okay. If you have common shares, this is a great spot to sell some cash secured puts just below that $7, depending on what the premium is, because it still gives you some exposure to the upside. If you wanted to make that a synthetic long and go out and buy some September, October, I know there's a gap there in the options. I'm not recalling which month it was there, but I would look at above $16, like maybe $18 calls, because that would give you a little better exposure to the upside. So in other words, what I'm saying is take profits now, sell some cash secured puts, put a piece of that into $18 calls in September, October. That's your synthetic long. Risk maybe 25% of your gain from your current move down from $2.50 to $10. So you have a $7.50 gain. So I'm saying your risk there is $2.50. I just have never seen a push that doesn't get a back test. Usually on a shallow back test, it's the 236 fib, but I always expect 50% back, as you all know, especially those who have followed before. That ideology has worked and it works consistently. So that would be my thought on AST Space Globe. All right, now look at Caesar. Now, I think a lot depends on the consumer going into the summer. And I think Kirk's actually going to be out in Vegas soon. So he'll be able to tell us what's going on, or maybe he needs to take a trip out there, Kirk, to Vegas, and tell us what the heck's going on with the casinos. But we've been in this flat since, again, the mid part, or really October of 2022, and we put in our high around August of 2023. So, this is our low, this is our high. We do not want to close below this low because then this is just an A, this was our B, and then we're going to get a C way the heck down here. So it'll start a new downtrend. What I like about this is the squeeze that's going on with the Bollinger Bands. So we've got a new primary wave setup at 3251, whatever that is. Now, I think 79 as a target for wave 3 is a little more aggressive than this flat. It could just continue to put drive 1, drive 2, drive 3 right here, drive 4, drive 5, and then we could still break down. I don't think it stays there that long because that's a very elongated flat. I mean, for us to be out there into 2026 would be huge. So, but I think the best strategy here is selling some cash secured puts around 25 or 30. I don't know that I would get much. I mean, you could push to 35 and take some risk because I really think that's, this is our divergent low. We've gotten a little bit of a higher low, so it's been back tested. We tested the breakout. We broke out, right? Rejected it, came back in, right? Broke out, but it didn't continue. So typically what happens is you fade after that, then you get another test, back test, and then we launch. That's the most likely outcome that I see. So, all right, now let's look at red velvet. Now, again, trend support is way the heck down here. Keep that in mind. Almost everything in the growth charts that I thought had upside were in flats. I don't necessarily like that. I'd rather have different setups, but that's what we got. So that's what we're looking at. So our breakout line's up here around 28, just above us. So we're about 550 overhead. So we got a lot of work to do right here because we're just now testing this push and we're rejecting price just a little bit, but not bad. It's closed on the high side, so it's more bullish. So our target is very shallow, though. This whole look, this is an ABC pattern. So, when we break out, it should be shallow. It should be like an overshoot, and then we should reject price and head lower again. So, maybe $32 is going to be on our high side. Now, as far as the only thing that I would even suggest here is put a piece on, maybe a starter position in $15 to $18 cash secured puts, because I don't see much more going on there. But that's what I have for this week, folks. So with the growth stock June update, of course, please review our disclosures at the end of the presentation, and please like and share this on Facebook, or on Twitter, or Facebook, either way, wherever you see it, wherever it might be, or YouTube. And great trading until next time, folks.